This is a $50,000 trading combine on Topstep. On this combine, I have to turn 50,000 into 53,000 without hitting 48,000. I have a simple strategy where I trade channels on a naked chart using RSI divergences. So there's two separate strategies. One strategy is a risk management. The other strategy is chart analysis. Two separate. So the risk management is meant to cut my losses so that I don't stack my losses in a day. I cap my loss at 300 per day. So my daily stop loss limit is $300 per day. Once I hit negative 300, I liquidate and I lock myself out of my account. I don't cap my winners. I have two trading sessions. The first session is from 5 p.m. to 10:30 p.m. The second session is from 6 a.m. to 2:30 p.m. The evening session is meant to create a buffer for the New York session. So in the evening, the goal is to make at least 200 because the New York session, I want to give it room since the NASDAQ on the New York session likes to slap both sides. So I want to give it room.
You gonna have something with you on? Shit, you still got teeth on the left side. You got one foot on the left side. Man, you got bottom teeth? Yeah. That's the one hurting in the back. Mm-hmm. Yeah, well.
Your jaw now?
Loose. Man, you still gonna jump? You know, your low teeth down at the bottom.
Your mouth numb, huh?
Mm-hmm.
Your mouth numb?
Mm-hmm.
It looked like your cheek numb or something.
It's hurting like this. That's why.
So the risk management strategy is pretty simple. Just cap my losses at 300 and don't cap my winners. Lock myself out. The chart analysis strategy As you can see, I trade a naked chart. This orange four-way is the New York Open. That's the New York Open session. No. No. So naked charts, channels, and RSI divergences. I'll show you guys one example. So on a daily, and I'm also using Hakin Ashi candles. So this is micro NASDAQ. If we can start the channel at the top, pivot, put the resistance right there on the lower high, and put the support, anchor the support to the first lower low in that retracement. And then this is
it's a plate and then nobody in it. I don't know if it's yours or not.
well, I don't know who that is. Somebody. Hey man. This right here is a liquidity grab. And this is very common on all time intervals. And this is where we want to buy. So the target would be the length from support to resistance once price breaks out of the resistance of the channel. So let's say for example, if price, which one is it? I think it's this. Let's see. No, that's not it. Is it this? Let's see. No, that's not it either. No, that's it.
It might be Joshua old plate. You can eat it if you want.
All right. Thank you. Yeah. So this is typically what price does over thousands of hours of screen time. This, let's say this is the pole. This is where it originated. Right, so this is a bullish flag. You can say it's a bullish flag. we're going to count the pole as 1 point. So I'll show you. This point is 1 point. The top of the pole is the second point. The lower low right here, the first lower low is the third point. The lower high, the fourth point. This is the fifth point. On the fifth point of a channel, it always extends further than the resistance or support because it's a fake out, aka a liquidity sweep. So in this area is where we want to be looking to enter along. In this area. And now, if we're anticipating price to break out, what's going to happen is price is going to reverse and it's going to look for liquidity. And where's the next liquidity grab? I would say it's either right here or right here, which is just where the opposition stop loss would be and where long breakout traders, well, late long breakout traders are looking to enter and where shorts would be puked out, which is this level or that level, maybe even this level, which basically means this is where I'm looking for a retracement. We can get that retracement here, here, or here. Wherever we get that retracement, I use the golden ratios, these three in specific, to find a good location for a retracement. Since I bought down here, I'm still going to hold on to this trade. It would have to stop me out for me to exit this trade. But I'd be looking to add to this trade in this area. I'd be looking to add another contract. But this is the daily, so this is just an example of my thought process and how I look for trades and manage trades. So this would be a excellent long-term trade, but on futures, we are all day traders. So my bias is just pretty much just bullish. All right, so I'm actually gonna manage my current trade right now. So I'll talk about my thought process on choosing this trade. What is this? Oh, okay, let's remove that. And what I'll do is actually just remove everything. I'll just start from scratch. All right, so we go to the daily. All chart analysis should start from the entire scope of the instrument you're trading. So I'm not gonna just start from here and just try to create a pattern. I'm gonna, because this basically is no pattern. You know, this came from zero, so if this came from zero, then I would assume that this is an uptrend, right? So let's say we start from the all-time high right here. And since I trade channels, I'm going to be looking to find an ascending channel, a sideways channel, or a descending channel. And here we have a perfect example of a channel. It's at the 5th point where I would be looking to buy. So I know on the day there's a really good chance that it's going to be bullish, positive. We're going to be bullish for like the next few weeks. Yeah. So I feel comfortable trading longs today. That's pretty much the bias. I have one opposing thought to my longs, and it's because NASDAQ always looks for liquidity sweeps, and NASDAQ is really rich in divergences. So my only opposing thought is that we would continue back to the bottom to take out these longs, puke out those longs, and then we would come back up here, like right here, then come back down, then go back up. This is kind of what I'm thinking. Might happen. The reason I say that is on the daily. The low here was also the low on the RSI, and I'll show you why that's important. So if we go to the 4-hour, from here to here is one leg. Everything else is just noise, pullbacks. But we get down here, and you see how price forms a divergent from this low was the lowest on the RSI, and then this lower low, but the RSI created a higher low. So that's a bullish divergence. And NASDAQ is really good at fulfilling these bullish divergence. As you can see, this is now an uptrend, but there's no change of character. So this could still be a downtrend. This technically still is a downtrend. And then here, now we're on a 100-tick chart because I'm looking to add to my position. One point, 2, 3, 4. All right. At the 5th point, we have this divergent. Price formed a lower low right here, and then a low on the RSI. And then it formed a lower low, and then right here a higher low. So I like it. And if it breaks, I'll just try to get a better position. On the 500 tick, this is a good divergent. Still a good divergent on the 500 tick chart. I'm just looking for a divergence on the 100 tick chart. And there it goes right there. Whoa, look at that. Wow. Wow. Okay, we're gonna wait for this to come back. Okay, wait for this to come back. You can put this. This is like a large market order. That's how you get FOMO'd. You can get FOMO'd on a long. So you can, if you're a short, you might have got puked out, forced out. This is a good support right here. I like the support right there. I think I might go ahead and get in, go long on this one. Not really sure. I think I should go long, just being cautious right now. Mm, I'm pretty sure I should go long right here. Mm. The reason I haven't went long yet is because I'm kind of looking at this. This right here is this is the good support that I meant. This is a nice support line right here. Oh man, it's too late to go long now. Too late to go long right now. I kind of missed my ideal entry, which would have been on a 500 tick chart. This was a bullish divergent between this low and this lower low. It was a divergent. I would have been looking to get in like right here on this bar, but I couldn't get that agreement on a 100 tick chart. Oh, yeah, actually, I did get it. I just missed it. Well, actually, it stopped me out and then it shot up. And then I started looking for another channel. I got a wedge and not a channel. Then it kind of took off without me. But let's see, that was a liquidity sweep right there. No, it wasn't. I'm either gonna miss out on this trade or it's gonna give me another entry. I'm looking for a bullish divergence. So there we go. Not yet. There goes our divergent right there. See what happens right here. I like it. Gotta be quicker than that. Oh man, I wanted to buy. I wanted to buy it like right here, at least right there. Let's see if I can get that. Right there. Put my stop loss right here. If it comes and stops me out, then I'd be looking to get back in I'll probably be looking for a liquidity sweep right here, and I'd be looking to get back in at about this level right here. This is another divergent, but following divergences with no additional context is how you can bleed your account slowly, because each divergent makes sense by itself, and eventually you'll get the bottom tick. But how many losses are you going to take trying to get that trade that you're looking for? So let's say right here on this low, it still hasn't went below this RSI. It went below the low on the price. So this is low 1, this is low 2. This right here is low 1, and this right here is low 2. It's still above. So if I would have bought that right there, the divergence by itself makes sense. And we go up, let's say we probably go in profits about $8 before we give it all back and more, and we get stopped out. And how many times am I going to get stopped out trying to probe for these longs, right? So and each time we get stopped out, we're losing about $10 to $30. So let's say we lose $20 every time we get stopped out on a probe. If you do it enough times, by the time you're profitable on one trade, you barely break even on your account. So we wait for this fifth point on the channel. We wait for it to fake out the shorts, catch that liquidity grab. Where's the nearest liquidity grab? Over here would be right here, this low at 24,201.50. If it doesn't hit that, I'm still looking for a divergent, but price absolutely has to break out of this support. If it doesn't, let's say, so we have a confirmed channel. If it so happened to just break out of resistance, I'd wait for it to get up here and retrace, and then I'd enter, and then we'd take off. But as you can see, we got our divergent right here. We got our divergent, and I kind of have to just go ahead and just buy this because we did get also, we got a slight overextension out of here. And this is a cheap long with like a 20R. This would be a 20R trade, so I don't really mind taking this. I wish I could be patient and wait for price to get down here, but that's not a lot of area to risk missing out on, a good entry, a good location for how much upside I stand to gain. So I'm willing to take about 2 to 3 losses trying to probe for this long. Especially if it's like $10. I think I just missed a good entry right there. Oh man, I think I did. I think I did. That right there was the divergence. That was a sneaky divergence too. These are the ones that usually take off. Ooh, that's horrible location. Oh my goodness, that's horrible location. We'll go ahead and exit that. Horrible location. Try to get it back down here. There we go. Put my stop loss right there. Now if it breaks down here, it's automatically just gonna come on down here. So you see those probes took me from, I think I was at 160, 170 down to 119. So I lost about 40, $50 over the last 3 trades. So doesn't take a lot. Does not take a lot, and the losses add up. And price is doing exactly what I said it was going to do. I just was impatient. So we can check here. This is a lower low on the RSI. Price forms another lower low, and RSI forms another lower low. So this still has some bids to hit. This isn't done, and there's no divergent up until now. So now we are looking for a long. This is long right here. This is what we were waiting for. All right, we're standing to lose about $10 in this. All right, we lost $10 right there. That's okay. That. Stand to lose 650, and um, and the only reason I had to do all of that is because I really messed up my positioning when I added that second contract, and I think price would have came back and got me anyway. So that was a good move on exiting anyway. But let me, whoa, what just happened? I think that was a mistake. That had to have been a mistake. Let's see, what did I do? Okay. So price went all the way back down. I think I actually just exited on accident in profit. That's okay. So my screen is getting messy. Never want the screen to get messy. I like a simple, naked chart. We want to prioritize the overall trend. Let's go to 5,000 tick. I don't know what's going on with my screen. We
How you coming up?
Oh, good. I'm up 125 right now. This is my XFA, my live account. So if I get 5 days where I make 150 or more, I can start taking out. So withdrawing, but I can only withdraw half. So, yeah. All right, so let's look for a pattern. For the main pattern that we are trading right now today would be the high of the day. All right. My internet's moving really slow. Oh my god. Man. Man. Mm-mm-mm. Hmm. Okay then. Yeah, this is moving way too slow. Way too slow.